Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 22nd, 2025, and we're diving into the latest earnings report from Fulton Financial. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Fulton Financial has just released their third quarter earnings for 2025, and there's a lot to unpack, from their net income performance to strategic initiatives like their stock repurchase program.
Revenue and profitability overview. Let's start with the top line. Fulton Financial reported a net income of $97.9 million for the third quarter of 2025. John, how does this compare to their previous performance?
Fulton Financial's net income increased by $1.3 million compared to the second quarter of 2025. Their adjusted earnings per share came in at 55, which is above the analyst's forecast of 48. This indicates a strong performance, driven by a solid net interest income of $264.2 million and a non-interest income increase to $70.4 million.
That's impressive. What factors contributed to this growth?
The growth was primarily due to an increase in interest income on net loans and a decrease in interest expense on borrowings. Additionally, non-interest income saw a boost from wealth management revenues and consumer card income.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. How is Fulton Financial managing its expenses and capital?
Fulton Financial has maintained a net interest margin of 3.57%, which is quite robust. However, their non-interest expenses increased to $196.6 million, primarily due to higher salaries and benefits. On the capital front, they repurchased 1.65 million shares at a cost of $30.8 million, which reflects their confidence in the company's future prospects. Their Common Equity Tier 1 capital ratio also improved to 11.5%.
What does this mean for their future outlook?
These metrics suggest that Fulton Financial is well positioned for future growth. The share repurchase program indicates a strong capital position, and the improved capital ratio provides a buffer against potential economic uncertainties.
Credit and asset quality. Credit quality is always a concern for financial institutions. How did Fulton Financial fare in this area?
Fulton Financial reported a provision for credit losses of $10.2 million, with an allowance for credit losses at $376.3 million, or 1.57% of total net loans. Non-performing assets decreased to $201 million, which is a positive sign. Additionally, their net charge-offs were at 0.18%, showing a slight improvement from the previous quarter.
That's reassuring. How does this impact their risk profile?
The decrease in non-performing assets and stable charge-off rates suggest that Fulton Financial is effectively managing its credit risk, which should bolster investor confidence.
CEO insights and strategic initiatives. Finally, let's hear from the leadership. What did the CEO have to say about these results?
Curtis J. Myers, the chairman and CEO, expressed pride in achieving record operating net income of over $101 million. He attributed this success to their focus on serving as trusted advisors and deepening customer relationships. This strategic initiative is expected to drive future growth and strengthen their market position.
It sounds like Fulton Financial is on a solid path forward. Any final thoughts?
Indeed, their strategic focus on customer relationships and operational efficiencies positions them well for continued success. Investors should keep an eye on how these initiatives unfold in the coming quarters.